Hey y'all, so I'm finally about to give y'all my strategy. It's very simple to me, I guess you can say, but I'm gonna try to break this down is the best way possible. Now, as a binary trader, it may seem a little strict how my trading is, but that's how I'm able to make consistent profit. So, one thing I told someone before is that I trade binary exactly how I trade forex. I kept on trying to change my strategy around, and I was, blowing accounts, et cetera, et cetera. When I was just like, let me stick to what I know works. So that's when I started trading binary, as I do forex trading. So, like I told you all, my strategy consists of the Fibonacci retracement tool, which I'm on the app right now, but if you go to your drawing tools down here, I have it starred, but if you scroll, it's under Gann and Fibonacci. It's right there. So at the top, since I have everything I want favored, I can just go right here, pull it out. And what I want to do now, I want to show you guys my settings for my Fibonacci. And if you want, copy down my exact settings. I will say this, you don't need the -27 and the -62. I had it when I was trading Forex and I just didn't get rid of it. The numbers that you need are the 0, the 65, the 70, and the 100. Those are the ones you need. So let me go here and screenshot what you need. So get all of that. And I'm going to scroll down a little bit more. And you're going to want to get all of that too. So the reason I have like a lot of these unchecked is because it just looks messy. It's a lot of background noise when you first pull up the Fibonacci. All the levels I believe are there as well, and you don't need all that. So if you want yours to look, as clean as possible, get rid of all that background noise and you can have it looking like this. Now, since I do have this Fibonacci tool here, let me delete it, and I'm going to show you guys something. I'm also going to show you what it needs to look like for when you're looking for a buy and a sell. So you grab your tool and you want to go from the bottom to the top. You're looking for buys. If you go from, one second, if you go from the top to the bottom, you are looking for sales. So remember that if you ever wondering why your Fibonacci retracement tool may look weird, make sure you drew it right. It's a common mistake people do when using Fibonacci, and it's understandable. So always make sure you're drawing your Fibonacci right. Let's also get into the EMAs, because this is the main thing about my strategy. So I have a EMA on TradingView called FDLEMA, which stands for Fibs Don't Lie Moving Average. My mentor, Joe, one of his students came up with this indicator, so that way if you have a free version to TradingView, you can have all the indicators, moving averages that you need, and you don't have to pay more money, to upgrade your account so you can have more stuff. So going to this, looking at the settings for this, it doesn't tell you on here, but the settings for these is the 14 EMA, the 50 EMA, and the 200 EMA. The 14 EMA is the blue one. The 50 EMA is the white, and the 200 is the gold one. And I feel like the most important one out of all of these is the gold one. Why? Because the gold one lets you know where trend is. And that's one thing that I can't stress enough that you need to not deviate from. I do not recommend counter trend trading with this strategy. If the gold EMA is going up, buy. If the and it's above, the candles are above the gold EMA. If the candles are below the gold EMA. Please sell. Just keep following that trend. Do not deviate from the trend. Anything can happen. The thing about the Fibonacci retracement tool is that it's set in an algorithm, for how the market moves. So if you try to deviate from that, you're deviating from the algorithm, and we don't want that because we want to flow with money. So just remember that, right? So if you want, you can go ahead and you can add that, those EMAs. Now you can use the retracement tool on pocket options. I don't use it because I can't edit the settings, so I don't like to use it really. Also, you can add, of course, as many moving averages as you want to on pocket options. I just don't like the interface or anything, so I like to trade on trading view. Well, look at the market on trading view and then place my trades on pocket options. Another thing that's vital to my strategy is that with intense research as I've done trading, I realized that the market makes the best moves during a certain time. So I'm on Eastern Standard Time, and the market moves best for me from 9 to 11. So that's this gray area. So you can set kill zones in TradingView to where it's a gray area that only you trade, and you do not deviate outside that trading. Once I make my trade for the day, I'm done. I am completely done. Let's say I may lose one, I may take one more, and after that, that's it. But I don't place more than 2 trades a day, and I'm not taking any trades outside my zone. Now, you may be like a London trader, so you may want to get in over in these areas, but I would suggest, trying out the strategy and seeing what works for you. That's the best thing to do. Okay, so now that we done got the basic stuff done, let me go into and find some pairs and show you how we are going to mark it up to find our trades. Okay, so I found the good setup here. It actually happened Friday. So right here, we're on a 5-minute time frame. Also, let me reiterate that if you didn't see it on my Instagram, if you're on a 5-minute time frame, then you will want to have an expiry time of 10 minutes because you want to give the market time to move. If you're on a 2-minute time frame, I suggest 6 minutes because that's, more than enough time. That's what works for me. Now, if you start doing this and you're back testing, like, oh, well, actually the 10-minute or the 6-minute just works best for me on either or, perfectly fine. But I'm just letting you know what works for me. Okay, so let's get into here. I will say that this strategy is probably for like the more experienced that know about like market structure, so that can help you better. But I'm about to break this down. We have a very nice buy trade here. Now, let me break this down for you piece by piece. This little area right here is a consolidation zone. Price was just stuck in this area, moving back and forth, back and forth. It's in consolidation. Then these 2 candles broke out that consolidation. Once we broke out that consolidation, the market made a area that looks like a rally-based rally. A rally-based rally is when the market goes up, makes a short move down, and then goes back up. That's a rally-based rally move. And it made it right here, and where the market previous was, we made a short stop. So that's letting me know right here that we have a lot of buyers in this area, because previously the market went down, but now we have a break up. So I know the market is going to come back and retest this area. So what I want to do, since I have a strong feeling it's going to come back and test that area in particular, I don't want to put my fib here because I feel like I'm going to get in too early. I want to get in close to this area, So what I want to do is I want to take my fib and I want to place it here at the consolidation area, because that was the last leg before the market made that rally-based rally move. So I'll take my fib, pull it here, take it all the way up. Now, I will say this. I like doing my fib, and let me zoom in for you so you can see it. I like putting my fib body to wick. Why? It just works. When I back test everything, literally, it just works for me. And as you can see, the market came back down, hit our golden area, our entry area. Once the market comes down and it hits that 65 and that 70 or even in between, get in. You don't wait for a candle to close. You immediately get in. And the market absolutely came back down, retested this area, that rally base rally area, and went up. This is the 5-minute time frame, so you would have got in here for 10 minutes and that would have been a wick entry. And you would have been done. That's it. Another thing to note is that down here, the blue EMA crossed over the white. So that's signifying also that the market is in the uptrend. And then we started to continue up above the gold EMA. So it's just extra confirmation to show, hey, we're changing market direction. So get in and get ready. Right? Very, very simple. Like literally, those are some things you need to look for. Let's go find another setup. So here's another setup that I really like. And before you guys ask, the orange lines on my TradingView chart are lines from the hourly time frame. I like to see where the market is bouncing from. So I'll put my lines on key areas on the hourly time frame. So right here, we have a very good setup. The market is trending. Previously, it was trending down. And now we have higher highs, higher lows. The market is trending wonderfully. And then right here, even though it's outside of my area, right here, we have what I talked about before. We have a rally, base rally. And this is a really nice rally, base rally move. The market came down here and made a pause in a rally base rally. It trended up, broke here. Prices above the gold EMA. The blue crossed above the white EMA. We making solid moves. So what I would have did was I would have went to my previous leg before we got here, because I don't want to get in here and get in too early for the trade. I'm going to start where the move previously happened. Start at the bottom, make my way to the top here. And I have an entry here. Like I said, you can get in at the 65. You can get in at the 70. You can get in the middle. Here, it touched our 65 and then went up. Again, we're on a 5-minute time frame. I would have had a 10-minute expiry. I would have won that trade. And that would have been that. Right? Let's look for some more examples. So I want to show you guys this because I showed you an example of some trades I would take. I want to show you an example of some trades I would not take. So for starters, the market here is trending down and it looks really good, doing nice trends, lower lows, lower highs, very, very nice. And it came into my area. Now, looking here with my gold line right here, the orange one, the market came down and broke where it bounced from originally. So now it's breaking major structure on the 1 hour. Right here, another reason why I want to bring this up. This is a drop base drop. Red candle, green candle, red candle. That's a drop base drop, and price broke through that and continued trending down. Now, I know some people would have saw it and would have been like, oh, it's still trending down and it's making, you know, like pauses in the market where more sellers could live. Now, this is the thing. Somebody would have took their fib, more than likely put it here and then brought it down. You have an entry here, but I'm not 100% sure if that trade would have went. Also, I'm not 100% sure because if you look over here at this leg, let me highlight it. This initial leg is so choppy. I cannot stress enough. Try not to trade in a choppy leg. I don't like it because I can't predict where I believe the market is going to be or where I should place my fib. I don't like that type of anxiety when I'm trading. I like stress-free trades. Trading enough is already enough. So try not to make it difficult for you. So please know what to stay away from. Stay away from a choppy leg. You want a clean cut leg, no choppy legs. So I'm going to show you one more example for a buy, and then I'm about to try to look for some sales. Here is another clean cut leg. Now, the reason I'm showing you guys all the buys right now first too is because this is one thing that I want to emphasize, is that if you continue to take trades that are familiar, it will help your trading as well. You've basically seen this move twice now. It's the same thing. I have certain people that I've traded with before that literally only take sales because that's what work, or people that only take buys or that because that's what work. But one thing I've noticed, not only that, is that they take the same setup that they've seen before, because the market is going to do the same thing. It is going to, listen, the market is going to do the same thing again and again and again. And once you start to recognize that, it'll also start to help your trading, because now you opt out of taking bad trades. Do not take a trade that does not look familiar, right? So let's dive into this. Right here, the market was ranging a little bit, back and forth, ranging. Then we had the market come down. We had a move up. We have another rally-based rally move right here. Boom, rally-based rally. This leg broke out all of this right here, and let me put this here. That leg broke out all of this here, right? So what I want to do now, I want to go from my last leg before price made this little rally-based rally move, and that's where I want to start my fib. So I'm going to take my fib, which is here, go from the body to the wick, and let me fix that because that's a little sloppy. Price came right back in this area again. We're on a 5-minute time frame. Get in for 10 minutes. You won. That's it. And as soon as price comes and touches one of these gold lines, get in. Do not wait for the candle to close, because you will miss the trade. Don't do that. As soon as it touches the gold line, get in the trade. Boom, you made another good trade. We have an EMA cross here, blue crossed above the white, rally-based rally move, market retested it, market went up, you're done. That's it. Okay, so I think I found a very nice sale that we can look at, and I'm gonna try to break this down. So over here we got the white crossing above the blue, signifying that we are going into a downtrend. Right here we have a nice drop move, right? So the market came down and then it went back up into this area, right? But watch this. You will start your fib here because it's closest to the cross, so it's good to do. You would have brought your fib down and you would have had an entry. So I'm about to tell you, and please remember this, because this is important with market structure. You can move your fib down when the market makes another move, and you do not have to move it over. Okay, I don't like taking trades that are too far away from where EMA cross is. So it's fine to leave your fib where you started it, but as the market starts to move and you start to see it retrace, it's okay if you bring your fib down, right? Now the market came here, you brought your fib down, that's fine. Went back up, came back down a little bit, would have brought it down a little bit more. The reason I would have done this is because if you look here, my orange line, like I said before, signifies a key area on a 1 hour time frame, and a 1 hour time frame, no matter the pair, is very powerful. So what I see here is I see a 3-wick rejection. A 3-wick rejection. A strong 3-wick rejection. Price came up, made that doji. Price immediately went down. So this is telling me, oh, sellers live in that area. So if the market comes back in that area, I can get in for a sale. The market made a move down, made a lower low, came back up, hit that area, wicked it, and then dropped. And just off of, some quick analysis, paying attention to how the market is moving, paying attention to how the candles are forming, you got a good trade. It was a solid trade. I'm on a 5-minute. You would have got in for 10 minutes and you would have been done. That's it. Very, very, very simple. So this one would have been very risky to take. And if you're not scared of wicks, go right ahead. But the analysis was there. So let's dive into it. Right here, we have a cross. The white EMA is over the blue EMA, signifying price is trying to go down. We have lower high, lower lows being made. The market is trending down really, really nicely. But when we start to get into this area, it started to get a little wicky, right? But also take note that it's not breaking anything. It's just wicks. So it's trying to tell me like buyers are trying to fight through, but they are not winning the battle. So what I would have did, me being me, I probably would have took the risk. I would have took my fib, started it at the start of where the cross is, brought it down, and I would have put it here, right? Sorry, let me move that down a little bit more. All the wicks throwing me off. Okay, so I would have brought it down here because now we're in my trading area, and the market came back up and it hit it right here in this area. And from the looks of the way the market was moving, you probably would have had to hurry up and get in it because it seemed like it was moving really fast. But what I have noticed too is that the market will start making weird moves around like 10 o'clock a.m. my time. Don't know why, but it does it quite often. But the market came back up in this area, wicked it. Like I said, 5-minute time frame. You would have been in it for 10 minutes. You would have been fine. You would have got in with a sniper entry, and that would have been it. The market continued to go down for another 30 minutes, and that would have been it. Okay, so I found a trade example on the 2-minute time frame because I have been on the 5. I honestly mostly trade on the 5, so I am placing a lot of 10-minute trades. That's why if you've seen my trades, and I know a lot of y'all like, do you be betting most of your account or your whole account? Most of the time I'm betting half or the whole if I'm wholeheartedly know that this is going to go. But let me show you an example of a 6-minute trade that would have worked out. So boom, right here. Previously the market was trending down, then the market started to trend up a little bit, right? So we have this leg here that only broke this here. And then we have this leg that led into a beautiful rally-based rally, green, red, green, right? And that broke out all of this nonsense. Wonderful. I love it. And I got a strong feeling the market is going to come back down in that area and test it. And Lord and behold, we also have a cross here. So I want to not put my fib at the rally-based rally, but I want to put it at the leg before that so I don't get in the trade too early. I'm going to take my fib, put it here, and I'm going to take it all the way to the top, which is here, because before all that got here, that was just here, right? So the market was moving, boom, boom, boom. Price came above the gold EMA, started to go down a little bit. Then boom, it hit my sweet spot area. I would have got into this for 6 minutes. So each candle was 2 minutes. I don't know how long it took for this to come down, of course, but if you're looking at it from this way, it'd have been 2, 4, 6. So you would either got it out on this candle or this candle. Sorry. That candle. One or the other. And you would got in for a buy. Wick entry. You won. Continuing with your day, you know. No stress type of trades. I don't like those. I like simple. I like familiar, you know. I only take trades that's familiar. So if you really pay attention, most of the trades that I do take have a rally-based rally or a drop-based drop, because that's what I'm familiar with. That's extreme confirmation for me that I've seen time and time again. I've seen the market bounce from that area and go into my favor. And that's what I want. I'm not trying to sit here and figure out the market for real. I need to see things that I've seen before that I'm fully confident in, because I love being confident in my trades. And I'm pretty sure everybody else wants to be confident in their trades too. So that's all I really have to show you guys. If you have any questions, please hit me up. If you want as well, you can send me your setups. Like if you're trying to back test this, you can go on ahead and send me your setup, and I can elaborate on it with you, so that way I can help you guys. And, you know, I wish you all the best on your trading journey. Good luck, and I hope you enjoyed this video. Thank you.